So this morning I started at 10:30, a little past 10:30 actually. I skipped the opening bell, which is at 9:30. There's an idea in auction market theory that says, the first initial balance, which is the first hour of trading, it's what they call the initial balance. And usually people who use auction market theory will determine what could possibly happen for the rest of the day based on what happens with that initial balance. I decided to do that this morning, just wait for the initial balance. The first hour of trading. And usually if you break down below the initial balance, that means it could be bearish, or it means that, prices could continue down. If you break up above the initial balance, that could mean that it's bullish, or it means that price could continue to go up for the day. So we waited for the initial balance. So the initial balance then would be determined, or would be formed between 9:30 and 10:30 if you're looking at the Nasdaq. The Nasdaq or the S&P 500. So we're looking at the Nasdaq futures. We're using TradingView, and we're on 2-minute charts. So each candle that you see here is 2 minutes. The beginning of the initial balance is at 9:30, like we said. That would be right here at this yellow line, this vertical yellow line, 9:30. At the bell, we went up, came down a little bit, retraced a little bit. Really, we're going sideways in a range right here. And then we pushed up again, and we formed the high of the initial balance. The 10:30 is this second vertical yellow line. So this would be everything between these yellow lines would be the initial balance. There are sometimes good trades within the initial balance that you can take, and that happened this morning when we pushed up above the initial high of the day here. We hit this red line, which is an area of resistance that we had previously identified, where price could turn downward. Now, how did we know to draw this line of resistance here at this price level? Well, it's very easy. You just got to look to the left. This is the 15-minute chart. So again, price touched that price point and then sold off pretty violently there. That's what these top wicks are here. This is price moving really, really quickly to the downside. So price went up here and then violently moved down, just leaving the shadow of where price was. So these topping wicks are violent price action to the downside. So this is a 5-minute chart. You see it a little bit more clearly that price went up, sold off, could not return. That's why I drew this line here, because I thought this was a pivot point where price reacted and moved down. Whenever that happens, that's a line of resistance. That means that there's a high probability that in the future, when we hit that price level again, the same thing could potentially happen. It's not guaranteed, but the probabilities are slightly on your side that could happen again. So that's what happened. This was yesterday, and that's what happened this morning when we were forming the initial balance. So that was right here. This would have been a good area to short the market. Even though the initial balance isn't complete, we do have some confirmations to sell here. So that'll bring us to what indicators I'm using to confirm whether or not I'm going to get in a trade. Number one, where's the camera? Number one, we have an area of resistance that we've previously identified. That was right here. We hit that, and we pretty quickly realized that we're not closing above it. We're selling down. Number two, we're using cumulative delta. This indicator you can find for free on TradingView. Cumulative delta is what you see down here in this pane. Cumulative delta measures the difference between aggressive buyers and aggressive sellers. What we see on the way up to this point of resistance, we see the green bars are strengthening, doing good. Buyers are in control. And then when we hit the red line and you see the momentum to the upside flatten with these red bars. Strong green bars, weak red bars. That means that buyers to the upside, the momentum of the buyers flattens out. So we're hitting resistance. We're bouncing off of it. Momentum on the cumulative delta has flattened. Not just that, but 4 bars in, we start to see expansion to the downside. We see that here with these small red bars turning into bigger red bars. That means that sellers are taking control. There's more aggressive sellers now than aggressive buyers. That was cumulative delta. Now we have a MACD. This is the indicator you see down here on the bottom pane. MACD is just measuring momentum. Usually when you see this blue line cross, here, let's take a closer look at it. Along with other confirmations that we've been seeing, cumulative delta, support resistance lines, one way MACD will confirm that is if these lines are up towards the top. If you're looking to sell to the downside, these lines are up towards the top. This blue line crosses under the red line. The histogram that you see here is losing steam to the downside, is to the upside. So you start seeing power to the upside, and then you start seeing downward pressure. The indicator, the MACD is showing an increase in downward momentum. And then we have the lines cross here showing a potential sell sign. So you got the MACD showing a sell signal. You have cumulative delta showing that sellers are taking control. You see that here. I use cumulative delta to show me when to enter. My entry according to cumulative delta and along with all these other factors would be probably, let's see. As soon as I see strengthening of the cumulative delta, so let's look at this bar here, is this bar in the price here. I wouldn't get in on that immediately. When I'm shorting or selling, I want to sell green bars. So here I have my short signal in place. I have my confirmations in place. I also have volume too as an indicator. We have a pop in sell volume you see here. So you see this red bar and you see a pop in sell volume on the same exact candle. So now I know I want to short, but where? So again, I only want to sell green bars. So I'm going to wait for a retracement. That means I'm going to wait for price to bounce up first and then come back down. If I sell here, if I open my trade here, then I immediately start going in a red as price bounces up a little bit here. Doesn't go bad. It's not really, doesn't bounce up against you very far, but it's uncomfortable. I don't want to be in positions where I'm immediately in the red. So at the bottom of this bar, I'm going to be looking for a green bar to open my short position, and that happens here. So this would have been a good entry somewhere along in this, somewhere in this bar. It closes up to the high here, so I'd wait for the closing. So somewhere along the top of this red bar. It does go against you 8 points, 8.5 handles here. That's not terrible. So that would have been an entry, and then I would have been targeting the bottom of the initial balance. So the bottom of this gray rectangle here, and that would have hit, and that would have been good for 78 handles. 78 handles on one contract, just one contract, one E-mini contract of the Nasdaq. Let's just say 75. You get $20 per handle. That's a $1,500 move. Now, this is important. This is a trade that happened with all sorts of confirmation. You're selling at resistance. Volume is on your side. It's spiking to the downside. Sell volume is spiking. Cumulative delta, which is my most important indicator, is on my side as well, showing strength to the downside, increasing. And then you have the MACD showing sell signs as well. That means that this trade is a high probability trade with pretty low risk, meaning I wouldn't want to lose more than, too far up above these bars here. I'd be out for, I don't know, a couple $100 to $300 to make $1,500. It's a good trade either way. Even if I get stopped out, it was a good trade. So really good trade, with all sorts of confirmation. So what happened after the fact? After the fact, the real move happened. This is the kind of trade that you want to be a part of, where it's just beautiful, clean, powerful, sweeping in one direction. So could we have determined that this was a place down in here to buy and go long, make money on the upside? Do we have indicators that could help us? We do. Much like we hit a resistance line here, we're getting close to a support line that's it's an angular support line. So the first confirmation is that we went below the initial balance, but immediately we broke below it, but immediately went back into it. That will usually show that you're going to have continuation to the upside and potentially higher probability of breaking the top of the initial balance. That happens. That's one point for going long. A second point for going long would be that we're hitting a trend line. Why is this trend line there? Why I drew it there? I drew it there because I've noticed that there was some higher lows being made in kind of an angular fashion. I drew it right here with these 2 points. Let's get a closer look at it. Point, and then I noticed that we weren't coming close to the line, and when we did, we couldn't close below it. And so that was a good place to draw that trend line. Couldn't close below this trend line. It was holding it. We dipped below it a little bit, but we couldn't close below it. And so this is a 5-minute chart now. So you notice that we touched it again, kissed it, and immediately bounced off of it. That's a 2-minute chart now. Okay, so we have a break below the initial balance and an immediately reversal into the balance that's positive for going long. That says, yes, buy this. We hit a trend line. We immediately bounced off of it. That says, yes, potential buy. Next piece of confirmation that we have is cumulative delta. Again, just like we covered with the short, same thing happens to the downside. So we have aggressive sellers, big, powerful selling. So you never want to buy. You never want to go long or buy when this is happening. You want to buy when this reverses. So we have really strong momentum to the downside, and then as we hit that trend line, just like in the top side, the momentum of sellers smacks a wall. We go from powerful red bars to a small green bar, and then we have expansion to the upside with a larger green bar showing that buyers are taking control of the price. We have a bounce off of the trend line. Well, first, we have the breakdown below the initial balance and immediately reversal into it. Point one, we have a trend line where price reacts, bounces off of it. One thing to look at is when the previous red bar gets overtaken by the green bar. That happens with the second green bar. That means this was a good pivot point off of a trend line. Green bar, these two green bars take over the previous red bar, and so that's a good sign. There was no equivocation. Is that the right word? There was no squabbling over price here. It bounced and immediately took out the previous red bar. It's a good sign for going long, buying in order to make profit to the upside. Initial balance is broken and immediately reverses. Cumulative delta here shows that buyers are now in control. Now let's look at what MACD said. As soon as we hit that trend line, we have a cross. A blue line crosses up above the red line. That's a potential buy signal on the MACD. And also, if you look at the histogram, we go from growing red bars, weakening, 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 and then we're starting to move up, showing that momentum is to the upside. So momentum is to the upside on the MACD. Momentum is to the upside on the cumulative delta. We have a support line that we're successfully bouncing off of, and we've broken down below the initial balance of price for the first hour of trading. We broke below that range, but we immediately reversed. Price did not want to spend any time below the initial balance. We immediately reversed into the initial balance. All those are confirmations to buy. But where do we decide to buy? For me, again, I use cumulative delta. As soon as I see expansion on cumulative delta and I have all this confirmation, as soon as I see this green bar turn into a bigger green bar, I would be buying somewhere in here. So that would be somewhere in this red. So this red bar immediately shrinks. So this would also be a spot to buy because you already have a buy signal on the MACD or on this bar. So either of these red bars here, green bars rather, are a good place to buy. What I would probably do here? As soon as the previous red bar is overtaken, that's a good place to buy. So that would mean we're entering, let's say somewhere in here. I wouldn't want to lose the previous bar, so I put my stop somewhere around there for maybe 10, 15 points, 14 points. That means I lose about $280 if the price actually reverses. All right, so if we enter here, then I'd be targeting the top of the initial balance and, roughly. So let's say we're just looking at 90 handles to the upside. So that means on just one contract, that's $20 per handle. That's an $1,800 move. Risking $240 or $280, whatever I said, to make $1,800. Again, really good trade no matter what happens. Really good risk reward. Okay, so we identified two good entry points, one short, one long. But now this is an interesting case study in managing a long position. So let's say you entered here. You have confirmations. It's a great trade. Notice that it immediately goes in your favor. Does not pull back into this red. So anything in this red zone is you're in the negative. You're losing money at this point. But notice that it never pulls into the red. It just continues to go in your favor. These are the best trades. The best trades are always going to be trades that you get in and it immediately starts pushing in your direction. That means that you're on the wave. That means that you're in the current. You're on the right track. You're in the right trade. You're pushing with the energy of the market. The worst trades you're going to get into is the ones that you get into and it immediately puts you in the red. Immediately you're in the negative. And immediately you're just hanging out right under where you entered. That usually shows that you have a bad entry. It shows that you're not on the wave. You're not going with the flow of the market. You're in some slosh point. You're in some reversal point. In this case, that's what happens here. Let's look real quick at another situation where you think you might have a long position. You have confirmation. But in this case, you get in it and it immediately goes against you. So let's look at that right here. All right, in this case, we break above the previous high of days right here. You have a spike in volume. You have a buy signal at MACD right here. You have the growing histogram, so the background, the bars here showing strength to the upside. So this could maybe show you that you have a potential buy as you break the tops of the previous high. Let's say you think this is going to break the top side of this initial balance and we're going to keep going. So there's an argument to be made there because you have volume. you have cumulative delta turning around, and you have MACD. So let's say you entered here. Let's say you thought that this was going to continue. You say, I'm not going to lose this green bar. And who knows where we can go. We can go, up 50, 60, 70 points. This is this is what a trade looks like where you're normally going to be a losing trade. So as soon as you entered this trade, it goes in your favor maybe a little bit, and then it immediately puts you in the red. If it doesn't stop you out, I mean, this is already a $400 loss at this point. If you for some reason had a much wider stop than that, let's say you came in, you're down $400, $500, $600, and then starts going in your favor again, it actually puts you into profit a little bit. Anything above and the green is a profit, and anything in red is negative. This is down $500, $600, but it immediately puts you back into break even. So maybe gives you a little bit of hope, and then back. Now you're down $300, $400. Okay, but it also puts you back at some point into profit a little bit, but immediately goes back. So this is normally what a losing trade feels like. It never gives you a chance to sort of breathe a sigh of relief. You get into it and just immediately you're in the red. That usually goes to show that you're not in a good trade, that your entry was too early, too late, or that you just had the wrong idea to begin with. So you have some confirmations, but the trade immediately doesn't act like it's going to continue to go, and isn't confirming that you're correct about what you're thinking. Now, this just goes to show indicators will help you, but you also need a broader sort of scope. The reason why I would not have entered this trade is because, number one, there's this, you're ignoring this area of resistance, this red line. You're ignoring it. So again, these can act like walls. We entered right before that. So this violates a very strong rule. You never want to buy right underneath a point of resistance, right? So that's one reason why I would not have opened a long position here, is there's a very clear point of resistance. Also, you're at the top of the you're in the initial balance when you break the top, the previous high of day. Normally within the initial balance, these breaks of the previous high of day, I've seen a lot of that get reversed pretty quickly, where you break. It's sort of a fake out where you think it's going to continue to break to the upside and it doesn't. So there's a lot of fake outs in that first hour of trading. So you gotta be careful. So that's one reason why I probably wouldn't have opened a long position here. But a good way to look at when the indicators tell you to go. But if you just step back a little bit, you got to look at the context. A lot of times you need to defer to the context, or make sure the context and the indicators are aligning. If they're not, it's usually not a good trade. All right, so in this trade, the trade immediately goes in our favor. The context is on our side. That means we're buying at a trend line, so we're buying above a successful bounce off of a line of support. Eventually, we do show some, from this bar to this bar, we show a volume increase. Cumulative delta is on our side, and the MACD is on our side. The context and the indicators are aligned. When we get into the trade, that's confirmed when it immediately goes into our favor. That means we're sitting in the momentum. We're sitting on the current. This gives us an opportunity to manage the trade and make sure that we're maximizing the amount of profit that we make. So we're in a trade. We know it's a good trade. It's immediately moving in our favor. When is a good time to add to the trade? So we always want to be thinking about growing our position size when the trade is going in our favor. One place to do that is when you see your first red bar form and it's weak. It doesn't show any strength to the downside. Cumulative delta is still showing green. Here you got a red bar. High probability that this bar is going to be taken out by another green bar. So strong green bars, strong green bars, strong momentum to the upside, growing volume, weak red bar. As soon as this red bar is overtaken by a green bar here, that would be an opportunity to add to your position size. So you open with one contract, let's just say one contract here. You can add another contract here. That would put your average price somewhere in here. And again, you never go into the red. Pushes up, it gives you another opportunity to add here. Weak retracement to the downside. As soon as the retracement here, this weak red bar is overtaken by another strong green bar, that would be another opportunity to add. So let's say that averages up your entry price to here. So now you're 3 contracts deep and you're targeting, let's just say the top of, there's no reason to get out. Like, see this cumulative delta? It's telling you that there's no reason to get out of this trade. The first time it gives you an indication to get out is right here. So if you're paying attention to cumulative delta, you stay with this. You break the very top. You're up over 100 handles. Let's say you come up here, and then as soon as you come back down again, you take out, you come out for 100 handles. Beautiful trade. All the confirmations are there, and then the context is aligned with the indicators. How much is this trade worth with 3 contracts? 2, 4, 6 is $60 per handle or per dollar, and we made $100. That was a 100 point or 100 handle move to the upside. That's $100 in the price. That means, $60. This is pretty easy math, right? It's a $6,000 move. That's why I said initially, wow, I missed a monster trade here. This is the kind of trade that you want to see. Context and the indicators are aligned. You have several different strategies in place here. You're working the bottom of the initial balance. The volume is on your side. The indicators are on your side. MACD, cumulative delta is on your side. And you got support and resistance on your side. Just a textbook trade to look for. And so we talked about the setups. We talked about the strategies. We talked about where to buy, how to manage a trade, how it feels when you're in a losing trade. Again, once you enter a trade, it immediately just pulls back against you. Then you just cut bait immediately. As soon as I'm in a trade and it just immediately just dips under my entry point and puts me in the red immediately, I want to kill that trade pretty quickly. I do not want to sit in it. For me, a winning trade, I open my trade, all the confirmation is there, the context is there, and it immediately tells me that I'm correct by putting me into profit very, very quickly and never coming back. Those are the trades. I want to maximize my profit by identifying points where I can expand my position size and grow my position size by adding contracts. And it's very important that you add contracts, not just at random, but at points where the momentum of the upside is confirmed. And we see that with these weak retracements being overtaken by strong green bars. So really awesome morning. Some really good trade setups. And we'll take a look at what's going to happen here at the rest of the day. We got some important announcements. Some really, really big earnings tonight happening after the bell. So we might just wait to take any more trades or any trades at all until tomorrow morning. But we'll do some more videos on trade setups and indicators that you can use to help you decide when to enter and exit at trades. We'll do that next time.